So we're joined today by with Dale Nichols from Fidelity. Dale runs a number of Asia equity mandates at Fidelity, as well as the Fidelity China Special Situations, a London-listed portfolio. Dale, thanks very much for joining us today. I wondered if just to kick off, you could maybe just briefly describe what the investment objective of Fidelity China Special Situations is, and how you define your investment universe.
Well, I guess the objective is investing in companies in China, finding the best ideas that are China related, finding undervalued companies that should move to fair value over time and really grow the NAV that way. And then thinking about the universe, I have a lot of leeway to go really in any market and find ideas that are China related. So obviously that includes the 8 shares in Hong Kong, but the A shares, A and B shares, on the mainland, the US listed ADRs, etc. I can really go anywhere that the China-related ideas are.
Sure. Would it be fair to say that your portfolios tend to have a smaller mid-cap bias as well?
I think that's a fair point. I mean, in general, that's sort of my investment style. Generally, when companies are smaller, there's more mispricing in the market due to less information. So I do tend to focus, a lot on the smaller mid-cap space. Although I will say, in the A-share market, I actually find more value in the large caps.
Okay. I mean, you've come in at a pretty timely point. We've had a lot of volatility in markets over recent weeks. What are the reasons behind that, and has any part of your outlook changed at all?
Yeah, I think it's really a confluence of factors, but I think one core factor is just the growth in sort of the margin-based investing. So that clearly grew significantly, both in the formal area but also in the informal area. So that's clearly correcting now. And you've seen pretty significant government action to deal with that. I don't think, all the, just the level of government action, I don't think they're all necessarily positive. Some of them are somewhat, in some ways, I think, are delaying that process of the liberalization of markets, which are really, I think, a core thesis, particularly for the brokerage stocks. So I think it would impact, the midterm outlook for potentially the brokerage stocks. But outside of that, I don't think it really changes the fundamentals for most of the companies that I look at.
Sure. We hear a number of market commentators talk about other risks in China, and some talk of the potential for the country having its own credit crisis, a bit like what we saw in some of the Western economies. What's your view on that?
Obviously, post 2008, we've seen a significant increase in leverage in the systems. And that is a concern. The credit, that growth in credit, if we think about how that has played out in other economies, I think that's clearly going to lead to some non-performing loan issues. I think you can sort of think of the banking sector particularly being under pressure as a result of that. But the calls for a real financial crisis. When I think about a financial crisis, I think one of the key things defining that is really the drying up of liquidity. And the liquidity support in the financial system in China is still pretty good. Obviously, you've got we're talking about government-owned banks that can drive lending when they need to, but also if you look at the deposit support in the system, it's actually pretty reasonable. So that sort of liquidity-driven crisis, I think, is hard to imagine, but there definitely will be non-performing loan issues for the system.
Sure. Maybe a bit more on the sort of areas of bubbles. You talked earlier about the property market and affordability. Can you just maybe touch on that as well?
Yeah, sure. A lot is made of potential bubbles in the property market in China. And again, when I think about what defines a bubble in property, I think about affordability. So thinking about the prices of property relative to incomes, and property prices are up pretty significantly in China if you think what's happened in the last 10 years. Although we'll say that's mostly in probably the first and second tier cities. But incomes have grown pretty significantly as well. So I think you can actually make the case that affordability has actually improved in a lot of Chinese cities over the last 10 years. Additionally, a lot of the debt that we've seen increase in the system really hasn't been at the consumer level. It's more at the corporate level. I think that's where the problems are. The consumer balance sheet's in pretty good shape. So I think the potential, combined with things like urbanization, you can actually paint still a strong picture for demand, and therefore I don't think you're really looking for a significant wholesale collapse in the property market in China.
Okay. Maybe to move on to your portfolio,
Right.
you often talk about the portfolio in terms of themes or sectors that you're particularly focused on. What are they currently?
Sure. I don't think it's really changed significantly. I still really believe that the really interesting part of sort of the investment opportunity in China over the midterm still is in consumption. It's a natural part of this rebalancing of the economy. You've just got general development of the middle class. You've still got many categories in the consumption space that are underpenetrated. So I still think it's the consumption area, both in goods and services, that is the most interesting area. Additionally, in terms of the internet and software space, you're still looking at internet penetration that's just past 50%. And then, across obviously, things are moving online globally, but I think, in China, you can actually see that process move faster. And if you look at areas like e-commerce, you've already seen e-commerce penetration surpass that of the West or of the US. And that, in some ways makes sense when you think you just haven't had that sort of bricks and mortar retail build out that you had in the West. It makes sense that shift can actually happen faster in China.
Maybe to finish up, just talking about valuations, given the market moves that we've had, are they particularly attractive on the portfolio currently, and also in the broader market? How much opportunity is out there? Yeah,
obviously recent volatility has really presented some opportunities. So I have seen real value come through across a number of areas. Obviously some in the A-share market, particularly in the H-share small cap market. There's been some pretty attractive opportunities present themselves. So I've used that volatility to really to add to those positions.
And in terms of the portfolio, the listed portfolio as a whole, on a discount to NAV also. So,
yes. No, absolutely. Yeah.
Well, Dale, thanks very much for joining us today. I appreciate your time. If you want any further details on the Fidelity China Special Situations Fund, please contact your broker for further information. Thanks very much.